So $1 trillion, if you spend a buck a second from right now, you wouldn't hit $1 trillion for 32,500 years. If you spend $1 million a day from the birth of Christ, you wouldn't be at $1 trillion yet. And the Big Bang Theory of the universe happened 13,600,000,000 years ago, and that's a sparrow belch compared to $1 trillion, and we owe 16 of those babies.
Talk about perspective. That was co-chairman of the Deficit Reduction Commission, Alan Simpson, giving Charlie Rose some perspective on our $1 trillion deficit. Let's see if our next guest thinks those numbers are out of control. Michael Norman is the chief economist at John Thomas Financial. Michael, welcome to Taking Stock.
Thank you for having me.
So when you hear those numbers from Alan Simpson, I know you've probably heard a lot of them before, but when he puts it that way, you think what?
Well, he talks about perspective, but what about the perspective that the global GDP in a year is 66 trillion, or the entire assets of the United States is 200 trillion. Look,
you're saying what? Everything's manageable?
They're wrong. They're wrong. He's wrong. He doesn't understand our monetary system. Let's start off with one simple concept, that the dollar, our unit of exchange, it's a simple public monopoly. The government is the monopoly issuer of the dollar, right? So when he talks about 16 trillion of those babies that we owe, what is that? That means that over the last 234 years since the birth of our republic, the government spent 16 trillion more than it took away from us in taxes. What does it mean? Another way to say it is that the public has 16 trillion more dollars than it would have had if the government didn't do that. Now, the economy grew. The dollar is actually very strong and globally held.
Wait, you're saying all this debt is good and that how quickly we're growing this debt is good?
The debt is a function of our economy. Without those dollars, we would not have commerce, okay? So, I mean...
Yeah, but we've had a surplus and we've had a great economy. Why do we have to have debt and a growing economy?
That's a great question. How does the government run a surplus? It would have to take back those 16 trillion that reside in the hands of the public.
But my point is we can have a surplus and a healthy growing economy without owing all this money. Isn't that a better situation?
How could you do that? The public...
Well, now it's tougher.
If we don't have a barter economy, we need to have a unit of exchange. The unit of exchange is the dollar. And the government's spending of that dollar equates to higher incomes, more roads, more bridges, more education. Indeed, it's the very wealth of our nation. So it's necessary that that happens.
All right, let me go back to Erskine Bowles. He worked with Alan Simpson on the commission. He offered up some words of optimism.
We face the most predictable and also, luckily, the most avoidable economic crisis in history. Nobody disputes the arithmetic. The fiscal path we're on is simply not sustainable, and these deficits are like a cancer. They're really going to destroy the country from within.
The deficits are a virtue. Look, what he is suggesting is the very program that Europe is on right now, which is impoverishing Europe. Our nation ran up a debt 3 times what it is today in terms of our GDP in World War II. It didn't bankrupt us.
Yeah, but then we had a boom afterwards.
We had a boom precisely because all that spending created real capital and incomes for people. Listen.
All right, so what is your point, that we can have a deficit, this is okay, don't worry about it?
Exactly. Here's the way to look at the deficit. The way to look at the spending, I should say, is that if we max out all of our resources on our capital in this nation, including our human capital, everybody's working, all our factories are maxed out, and the government continues to spend, then we're not creating the real goods and services, indeed the actual wealth, okay? That's when you run into that situation of too much money chasing too few goods. But we're so far away from that right now, and we're literally impoverishing ourselves. You know, when they talk about the debt being a legacy passed down?
What about the concerns of something like the Chinese? You know the stories that are out there about their concerns whether or not they're going to continue to buy U.S. debt. You don't buy it.
Well, the Chinese have
What?
been selling a lot of their debt, and guess what? Interest rates are coming down because the way we pay the Chinese back is that the Fed simply debits their securities that they hold and credits their reserve accounts, their checking accounts. It's like you switching your money from your savings account in your bank to your checking account. It's a very easy thing to do. Listen, this year alone, Carol, this year, 6 months, we have redeemed in this country 32 trillion $32 trillion has been redeemed by the U.S. Treasury to investors. That means rolled over this year. Nobody talks about this number, and interest rates are still at zero. The stock market is going up. The economy is growing. We're creating jobs. $32 trillion.
Listen, a lot of what we've seen, we hit a very low. We came off a very severe low.
That has nothing to do with it. That has nothing to do with it. We have people now telling us that unless we cut back, 5 years from now, we're going to have to roll over $6 trillion. We did $32 trillion in 6 months without even a hiccup.
So cut to the chase. You're saying at this point, don't even worry about the debt anymore. I'm
not even saying that. I'm saying we have to increase, the government has to continue to increase the debt because the private sector, the public, wants to hold more of it. They're shedding risky assets. They want to hold safe assets. That's the cash. That's the dollars that the government creates.
But I have a lot of guests who say, you know what, investors are tired. The returns that they're getting on those safe assets are pretty low. They're tired of seeing that. And they're ready to come into the equity markets and other asset classes.
That's happening.
So
that's the flip side of the savers, right? Remember, it's double entry accounting. So for every saver, there's a debtor. That's helping the debtor.
That start to retire and they're going to tap into some more government programs, whether it's Social Security, if that even exists, whether it's Medicare. I mean, how are we going to pay for that? How can this be a healthy equation going forward, Michael, all of this deficit, if we don't somehow get our fiscal house in order at this point?
It's not in order, maybe because we're not creating enough of the real goods and services. The way we pay for it, or the thing we should think about, is, and Alan Greenspan once said this, the government can pay as much money as it wants to whomever it wants. The only question is whether it creates the real assets, the real goods and services. Do we have the health care? Do we have the housing facilities? Do we have an economy, a productive economy that can support the retirees? The payment part of it.
But many would say we don't necessarily at this point.
Because why? We're holding back. We're not making those investments because we're thinking about the money as opposed to the real things, the real wealth, the real assets that we need.
I got to run. Thank you. That was
great talking to you.
Michael Norman, we appreciate it. Please remember to tune in this evening at 7 p.m. Eastern to catch Charlie Rose's entire interview with Erskine Bowles and